All right. Welcome to a Junior VC Unfiltered. I am your host, Bhumika, and this week we have Sanya and Varun with us. In this episode, we will discuss our latest piece, Can BillDesk be the gateway to India's merchants? So last fortnight, BillDesk was acquired by PayU, making it the largest online payments provider in India. Three friends who were working for a consulting firm in the United States jumped ship at the very right time to start this venture. For right after their departure, their old employer would cease operations. And at a time when India's internet base stood at a mere 50,000 people, these three friends, Ajay Kaushal, Srinivasu MN, and Karthik Ganapati, would identify a business opportunity in building a layer of services to assist banks in making payments go digital. In the year 2000, the turn of the new century and everything, neither banks nor billers had devised any form of electronic payments. And BillDesk began by putting together a platform and began onboarding banks, allowing them to connect with merchants or utilities who had to accept payments from customers. And this model basically revolutionized how the average Indian was thinking about payments. Customers no longer had to wait in lines to pay bills, and utility players didn't have to spend millions of man hours and everything reconciling transactions. So, Sanya, can you tell us about how they first raised funds and built a profitable business?
Sure. Yeah, I mean, as you said, Bhumika, just building on your point, back in 2000s, the scenario that you just described, to add to that, the market momentum was also not similar in like back in 2000 as it is today. Right? BillDesk has been like built remarkable business, not because of the market wave that was there back in 2000, but because it built a very strong business based on fundamentals. So we could say that it was in the day, as you mentioned, there were. I mean, it was not the economy that we see today. It was definitely early in the day, but it really flew because it was built on strong business fundamentals, and we can see that in many proof points, because we can see the kind of investors that invested in very early on. It was large public sector banks in India, very traditional sort of investors, if you will, which are of course stricter on obligations. And the market used to see things very differently back in 2000, but it was able to convince them because of the fundamentals that it was laying its business on. So the way it works is quite simple. It's just BillDesk just takes a cut of the total transaction value that gets processed through its platform, like a 0.3% cut on an average, which is, of course, as you can see, a very thin margin, which is big because it's even a cut of merchant discount rate, MDR. And so in order for it to be profitable, it had to very meticulously plan for costs, which it eventually did. And that's why it became profitable more than a decade ago, like really unheard of in the startup ecosystem. And it was able to do that because, as I said, going back to fundamentals, it started with a B2B kind of a strong mindset, and it stuck with till a very later point in time. So it like the business nature involved less of cash burn, healthy margin profiles, and taking it on from there, which eventually proved out to be successful. So in recent years as well, if you see, it was still growing very humbly, like 20% year over year, like a moderate, healthy double-digit growth. And it is because the valuations or the place where market valued it at was just because it's a volumes game, right? It's, as we saw, like in the unit economics, it's not a value play largely, it's a volume play, and it played on volumes, reached to 60% of the market share in the e-billing segment. And hence the acquirer here didn't just value it in terms of the revenue numbers, but also in terms of time that it would take to build this strong of a business and this big of a business. So I like to say that they didn't, like, we could say that, you know, it got valued at 20x of revenue this time, which is almost double the revenue multiple that they got 2 years back. But I don't see it completely on the market wave. It is because the acquirer bought 5 years. It just didn't buy a business, it bought 5 years, and then you can't ascribe a true value to time. So I think it's what they've built is remarkable. And I don't know what would be next in terms of being a decade profitable business that we could see now.
So thank you, Sanya. On that very question, right? What is next? So Varun, can you tell us about the potential that the market holds, as well as, you know, the competitive landscape and how what this acquisition actually means for BillDesk and PayU.
Yeah. So I don't think anyone needs convincing that the market is obviously ginormous, right? I think the FY21 RBI report states that there were about 24 billion uh, digital payments that happened in 18-19 that grew to about 44 billion the year after. And I think they're estimating that by in a few years, the per capita transactions will increase tenfold to 220 per year per person, right? And today, if you just look at the e-commerce penetration across the country, right, it's probably 5-6% of total retail. We have probably about 150, a little over 150 million transacting users. That base is only going to increase. You've seen the penetration of internet going up across the hinterland, and you're seeing more and more adoption uh, by people from outside the metros as they are beginning to trust more and get more comfortable transacting online. You're seeing more businesses target these customers. So really, we're literally just scratching the surface from a market potential point of view. And this is just on the B2C side, right? I think we estimate that there'll be $2.6 trillion of transaction volume flowing online. And then you have a whole B2B side of the world, which is often not talked about. But I think Visa estimates that the B2B payments market in India is about $2 trillion, right? And today, and very little of that is online. And so I think between these two worlds, there is a huge market out there that has to be captured. As far as what this transaction means for both of them, right? I think one is you've obviously created a behemoth of an organization, $147 billion of transaction volume, very large revenues, and lots of generation of free cash. I think this transaction is actually very interesting from a BillDesk perspective. If you look at BillDesk, right, traditionally they've almost become like this traditional incumbent, right, focused on profitability, stability, sustainability, putting profit over growth, trying to grow in the right manner, and as a result, they may not have innovated as much as they would have liked, or people would have liked on some of the other areas that they potentially could have. And this is where the opportunity for some of the upstarts or the newer payment platforms has come in and allowed, and they've been able to capture this opportunity, right? So if you look at Razorpay, I think it was founded in 2014. And they in FY21 they did $55 billion of transaction volume, right? In 7 years, they've scaled to almost 50% of what BillDesk achieved in 20 years. That by no means is it a slight on BillDesk, but you see that they have left an opportunity for some of the younger guys to come in and grow really quickly. One could argue, one could, you could have differing opinions about the growth trajectory or the choices they've made while growing, right? So offering negative gross margin products and scaling. So obviously unit economics are a big question mark in some of these upstarts. But what they've done well is starting to cross-sell and bundle multiple products and services, right? So whether that's your HR management, softwares, your lending to these players, and all of these payment gateways really believe that that's where the monetization will come from, right? So the hook into a lot of their customers is the payment gateway, because it's literally essential, right? You have to have a payment gateway, and you literally distribute that for free, and then you tack on all these other services where you start monetizing. I think the other thing that BillDesk did, which I think Sanya also mentioned, was they went after profile of customer that was more government oriented, banks, large enterprises, which are harder to sell to, harder to service. They didn't necessarily focus on the SME side of the world, because I think they recognized that it would be harder to monetize that side of the world, which is where the opportunity came in for some of the upstarts to come in. I think with PayU's acquisition, PayU obviously has a broader I would say broader suite of product, right? And now suddenly, to like the 5,000 large enterprises that BillDesk has, PayU can start cross-selling some of their existing products, right? And that's really interesting from a PayU perspective. I think what you also have from a PayU perspective is a company that was built in an era where there was very low trust in the digital economy, right? And people were wary of transacting online. In that environment, BillDesk build a very, very large successful business, right? And so they understand, I think, what it takes to go from 0 to 1. And as we spoke about how penetration will continue to increase in different parts of the country, I think you'll then have the opportunity for BillDesk to start addressing that market and understanding what those consumers need to, and inspiring trust in them, and hence expanding the overall market.
Thanks a lot, Varun. That actually really puts everything into perspective. And all in all, a very solid acquisition. Certainly looks like PayU is well positioned to win the market. Thank you so much for tuning into a Junior VC Unfiltered. We hope you enjoyed this episode, and we'll see you next week.